Let's talk about what you expect. Coming up this weekend, the market is pricing in around a 60% haircut. Fernandez is talking about a 20% haircut, principal haircut we're talking about here in terms of outstanding government debt. Where do you see this one ending?
Well, remember, there are two things that can happen. One could be a haircut. Another one could be an extension.
You think you have to extend a very long time.
Very long time. That may be in the cards. But at the end of the day, I keep on telling people, listen to what Fernandez is saying in Spanish to his constituents. And he's got to be saying, look, I'm going to promise you this, promise you that. I'm going to get you out of this hole. How does he do it? He's got to have a huge haircut or a big extent. In other words, not paying back.
Yep.
Number one. Number two, he's got to start maybe taking over companies. That's what worries me. Possible nationalization of companies. So, for example, people don't like high electricity prices. You nationalize the electric power company and cut the rates. That's what you have to watch for. I'm not saying it could be a Venezuelan scenario, but you never know. I mean, we haven't seen that before in Argentina, but we've got to look very, very carefully at what his people are saying.
In a world of negative rates, in a world of low rates, the kind of yields that some of these countries, like Venezuela may be an example, but there are plenty of others out there, are offering, are very attractive, in this yield-hungry world. Do you think that high-yield investors at some point are going to go, enough's enough, we can't make this work? What is your strategy for finding yield in a low-yield world?
Well, the great thing about emerging markets is that many of them are paying good yields, and they're stable. They're relatively good bets.
Risk-adjusted, they
risk-adjusted bet. So it's pretty good. There are quite a number like that. But you have situations where, let's take India, for example. They really don't have an international bond market. They haven't really issued. So now's something that could be very, very interesting because it's a growing country. They're growing at 6%, and it could be very, very interesting. But the only trouble is the Indian government is reluctant to take on this kind of debt. But this is something that could be coming if interest rates keep on coming down like that, because it'll become irresistibly attractive to these countries that are really good bets in terms of their stability and so forth.
Mark, on Argentina, I mean, back in August when we got those, when we had the primary there, I mean, we had a pretty violent reaction in the markets. I mean, a lot of people really were taken off guard. And I'm just wondering, you know, even for those folks that are still invested, they have no choice but to stay and stick with this new government, whatever it's going to look like. I mean, how long can they really wait this out? I mean, this isn't like the old governments from back in 2012 and back in you know, the early aughts, when you had a little bit more clarity as to what you were getting.
Right. But don't forget, there are a whole list of funds out there, investors out there who are willing to take a bet, and provided the price is right. And a lot of these bondholders are desperate to get out. They'll just cut their losses and sell at any price. And there are people that will pick this up. So there'll still be a market in these bonds going forward. But as I said, the scenario is not very, very good for a haircut, possible haircut, and also an extension over a long, long period.